Hey everyone, welcome to another episode of AdMail. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, Adam Bergman here, tax attorney and founder IRA Financial, and welcome to another episode of AdMail. On today's episode, 3 investment related questions. One about doing a SAFE with an IRA, the other about investing in timber with an IRA, and the other doing a convertible note with an IRA. And in all 3 cases, you can do it. Okay, so that's not really going to be the central focus of the podcast. It's going to be more discussing some items to consider when doing those types of investments. So let's start with the first question, and it's from YouTube. And this individual wants to know, can I do a SAFE with my self-directed IRA? Now, a SAFE is essentially a simple agreement for future equity. It's not an actual SAFE where you keep, your gun or your watch. And what it is, essentially, it's an agreement between an investor and a company that allows the investor to invest for future equity, kind of like a warrant, but without the company providing actually what the ownership percentage or initial investment value will be. And the reason to do this is sometimes in these startups, it's hard to determine value. And with future dilution, a lot of investors say, hey, I'm happy to give you the money, but I want some type of warrant or agreement that I'm able to buy in and maybe a discount at a certain value in the future if there's a trigger event. So SAFEs are very popular for startups or businesses that are growing. And again, it's an agreement between the company and the investors. And yeah, you can do it with an IRA. Your IRA could invest in a SAFE type of contract, no problem. The advantage, obviously, is if you sell the shares, hopefully for a lot of money, the money will go back to your IRA without tax. There'd be no capital gains or other tax if it's owned by an IRA or Roth IRA. So that would be the advantage of using a self-directed IRA to do SAFE. Second question is from Yolanda T. of Olympia, Washington. Yolanda wants to know, can I invest in timber with my Roth IRA? So the short answer is yeah, right? The IRS only says 3 things you can't do with an IRA. Can't buy life insurance, can't buy collectibles like art, and thirdly, you can't invest in any transaction that directly or indirectly personally involves or benefits a disqualified person, which is the IRA owner, their lineal descendants, parents, children, spouse, daughter-in-law, son-in-law, or any entities controlled by such persons. So timber, assuming you don't own the timber, can be done in an IRA. It's a way to diversify your portfolio. It's an alternative asset. Some people find that it's a good hedge against inflation. You basically are buying land that produces timber. Okay, and there's millions of acres of timberland across America, right? So how does it work from an IRA? So we know you can do it. So there's something called UBIT, unrelated business income tax. Okay, and basically UBIT applies if an IRA makes an investment into a business, and business is a key word, that's operated through a pass-through entity like an LLC. The other way to trigger UBIT is if you buy real estate in an IRA or use leverage to make an investment. So assuming there's no leverage here and you're just buying land with timber on it, that's okay. There shouldn't be any UBIT from buying land. But if you start selling the timber and the sales reach a level that looks like inventory, then the IRS could argue that you have a business here. It's not passive in the sense like it's a piece of land, you're renting out an apartment, but it's more active, even though it's growing on the land, because of the volume of timber you're selling. The IRS could make the argument it's a business. And obviously that's a gray area, depends on facts and circumstances. But you're not just selling like one tree. You're going to be selling, thousands and thousands of trees that can be used for different, wood and lumber products. So in many cases, investing in timber could trigger UBIT. You could structure in a different way where you're buying the land and then maybe renting out to a third party to actually collect and sell the timber, and you're getting a flat rental for the use of the land. That's okay because rental income is passive and not subject to UBIT. But if you're running a business, you kind of know it, right? If you have a team of people that are out there, cutting the trees down and packaging them up and transporting them, it looks a lot like a business versus just renting an Airbnb out or renting an apartment out for 12 months to someone, which is super passive. The investing in timber and owning timber on land could look a lot like Walmart selling T-shirts or bottles of shampoo, which is inventory and is a business asset / income. So that's the gray area with timber. But again, there are ways. If you work with us, if you're a client of IRA Financial or looking to do it, give us a call. We have a lot of different strategies. Been doing this 14 years. We literally wrote the book on the Self-Directed IRA. I've written 8 books on this stuff. There's a way to structure it to minimize taxes. Our team will find it for you and help you. So thank you, Yolanda. Third and final question of today's podcast from Facebook. Can I do a convertible note investment with my self-directed IRA? And just like a safe, yeah, you can do it. What's a convertible note investment? It's an investment that starts off as a loan that the investor or the company, depending on the structure of the note, has the ability to then convert it to equity. So when you have a note is a loan. So a convertible note starts with, let's say I'm putting $100,000 as a convertible note to company X. I'm basically lending them the $100,000. Maybe it'll pay interest at 6%, 8%, right? And then either party, or maybe there's a triggering event, has the ability to take that note and then convert it to equity. So let's say my arrangement is, hey, you're a startup, you're starting a sunglasses company, and I'm going to put 100 grand in for 10%. But it's going to initially start as a convertible note, meaning you're going to pay me 10% on the 100 grand, and I have the ability to convert any outstanding amount for equity in that business. Okay, so it could be 10%, it could be 8%, depending on how much of that note is still outstanding. Or on a certain triggering event, I have the ability to convert the note. Whether the company pays interest or accrues it into more equity, again, this is something that will be negotiated between the parties. But the important thing to remember is, yes, a convertible note, just like a safe investment, can be done with an IRA or a Roth IRA. Very common. That's why I'm happy we included questions on both the safe and the convertible note, because they're very two common mechanisms for investors to invest in startups. You don't need to be a venture capital firm to invest in a startup. It could be a friend, neighbor, cousins, family member's business. There are ways to do it. Obviously, you want to talk to an attorney or financial advisor, but if you do want to use retirement funds to make those investments, you can certainly do them in an IRA or Roth IRA through different variations. And a convertible note is just one of them. Remember, if you are in a convertible note setting, the interest on the loan is not subject to UBIT. But if you do convert it to equity and then there's profit allocation from a pass-through entity, there could be some UBIT on the profit allocation of under or over $1,000, I should say. But if you sell the equities, the stock, the membership interest, those should be capital gains. Assuming there's no debt, there would be no UBIT on the sale. Again, this is very important and a paramount reason why to work with a company like IRA Financial. We don't just set up these IRAs. You can go find many companies that will set up a self-directed IRA for you. I think what really sets us apart, and our success kind of proves that, is we go above and beyond. We don't just set up the IRAs. We'll consult with you. We'll help structure it. We do the record keeping. And more importantly, we do all the annual reporting, whether it's to the IRS or to the state for filing federal tax returns, state returns, UBIT returns. In the 401k world, we'll do the 5500s, the 1099s. We do it all. So it's really from A to Z. We do it all. Plus, we'll help you consult and try to find a solution that minimizes taxes and is the most tax efficient for using retirement. And guess what? Sometimes it does happen where, depending on the investment, we may tell you don't use an IRA. There are more tax efficient ways to do it outside of the retirement world. That does happen. Thankfully, we're very successful. We're a volume-based business. We want to do what's right for our clients. So even if it means you not doing an IRA because it's better to do it with personal funds, i.e. oil and gas, or maybe you want to get around UBIT, and the only way to get around UBIT is to use non-retirement money. We'll tell you. We're going to be honest with you, and we're going to hopefully put you in the best position to succeed from an investment and tax perspective. So thank you again for hanging out with me today. I know you got a lot of other things to do in the holiday season. I want to wish everyone happy holidays. Hope you had a great Christmas. Happy early New Year's. I hope you have only good happiness, health, prosperity for you and your family. And I hope 2024 brings all of us only good for us and the whole world. We should know only good and no sorrow in 2024, along with health and happiness, and why not some prosperity? Why not? So that's it for today. Again, Merry Christmas, Happy Holidays, and I'll see everyone again in 2024 next week. Ciao, and take care.